What are the most important commodity index trends right now? Imagine tracking a giant basket filled with energy, metals, and agricultural products. That's what a commodity index does. It shows how prices are moving across many different markets. Right now, several key trends are shaping how these indexes perform and what investors should watch for. First, commodity prices have been quite unpredictable since 2020. For example, prices for beverages like coffee and cocoa hit record highs in early 2025 because bad weather cut supplies. Meanwhile, food prices for grains, oils, and meals are expected to drop this year. Rice and soybeans are plentiful, but maize and wheat might stay tight, limiting the overall decline. Raw materials like cotton and tobacco could also see prices fall before stabilizing in 2026. These mixed movements show how different sectors within the index react differently to supply and demand changes. Inflation is another big factor right now. Inflation has hovered around 3%, higher than the 2% target. This higher inflation helps support commodity prices because it makes raw materials more attractive. The strength of the US dollar also plays a role. When the dollar is strong, commodities tend to be cheaper for foreign buyers, which can lower prices. But if the dollar weakens or stays steady, commodity prices often stay firm or even rise. Currently, the dollar faces some challenges, so a weaker dollar could help boost commodity prices. Supply conditions are also tight. For over 2 years, many markets have experienced shortages. Energy markets, especially oil, are affected by policies and geopolitical issues. For example, US oil production and tensions with countries like Iran influence supply and prices. Agriculture is impacted by weather patterns like El Niño and La Niña, which affect crop yields. When supply is limited and demand stays high, prices tend to increase, keeping markets tight. Looking at specific sectors, energy remains a major part of commodity indexes. Oil prices are expected to stay between $70 and $85 per barrel in 2025. Despite efforts to switch to cleaner energy sources, demand for oil remains strong, especially in emerging markets. Natural gas is also important as a transitional fuel. Metals like gold continue to attract investors during uncertain times, while industrial metals such as copper are gaining because they are essential for electric vehicles and renewable energy. Lithium is becoming more valuable because it is used in batteries for electric cars and energy storage. In agriculture, grain prices might rise due to changing weather, while soft commodities like cocoa and coffee could see prices fall as supplies improve. Soybeans remains in high demand because they are used in food and biofuels. For investors, it's smart to watch inflation trends and currency movements closely. Understanding how supply and demand shift in key sectors helps predict price changes. Diversifying investments across different commodities can help manage risks and take advantage of these trends. Overall, current commodity index trends are driven by inflation, currency movements, supply shortages, and sector-specific changes. Keeping an eye on these factors can help you make smarter decisions when investing in commodities.